Good evening, everybody. It was a real fun day today in Mars, PA. This was out my back sliding glass door out of the office this morning. I think those seven are huge birds, and yeah, it wasn't very snowy here, and so it was a great day. First of all, I couldn't get into the chat room because there was something wrong with, I guess I can't get in through Firefox. Yeah, those are turkeys. Then TOS had reconfigured, so it took me another 45 minutes to get that all fixed. And then as I came in, as you know, during the morning comment, sitting here, and then boom, the power went down. And it stayed down from that time all the way up to about 6:30 this evening. As you can see, there's not a whole lot of snow on the ground, and it was in the near 40 today. So it was just a fun day of everything. But so here's why we want to always observe our confirming indicators. We could see there was a reversal going on in the Dow. And where was it likely to bounce to? Right up here to the T-line, is what kind of projected. And this is why I always say, watch to see what it does once it gets to the T-line. Today, with it selling off, it kind of negated this whole candle and also told us they weren't going to be going up through the T-line just yet, which simplistically, whoops, and how can I forget? And, well, for crying out loud. I have forgotten. There. Eesh. The only one that was showing strength, a good strength on Friday, was the NASDAQ, but then it gave everything back and then some today. So this is why I always kind of stress that you need to see a candlestick buy signal and a close above the T-line, which the NASDAQ did, but then didn't confirm it. So the fact that it didn't confirm it puts us right back into the scenario that the T-line is acting as resistance. And our simple analysis is we're in a downtrend until you can see a close above the T-line. The fact that they came up above the T-line for the S&P March contract, closed back below here, that just told us there was a bounce, and that was it. I don't know, is the sound cutting in and out for everybody? All right, so on the commodity side, the bond prices, we've got the videos getting set up for commodity trading because we're getting a lot of people asking about it. Notice when it broke this downtrending channel. Now notice what the 10-year notes are doing right now, that little J-hook pattern. Crude oil, obviously, which has been an influence on this market. Same scenario. And so somebody emailed earlier this morning, why did I go after coffee versus crude oil? Because crude oil looked like it was having a reversal. But if you look at this chart very closely, I think you can see that this is not a signal right here. Looks like a bullish engulfing, but it opened slightly higher than where it opened or closed the previous day. It's not above where it opened the previous day. So that was just an up day and a downtrend. And so even though there was this strong move, today's trading, this is after hours so far tonight, today's trading tells us they didn't want to keep up above the T line. This could still be in a downtrend. On the other hand, the next signal would be a good buy because essentially we have a bounce, a pullback, and then the buy signal. That's when you want to start buying. So the fact that this was not a true signal was just that little doubt that this was actually a reversal. Whereas on coffee, we can see, let's get that thing off of there. No, Pshaw. We can see what signals had occurred here. The bullish Harami, that is a signal, followed by a gap up. So we're going to stay long, and now it's our target for coffee. Now probably the 50-day moving average would be a likely target, but we can see where this, let me make this smaller. We can see, and I'll try to do this with a trend channel, that if you took this and did a parallel line right here, I mean, that is an obvious, where's our next likely target? Back up into this area. Now, we'll watch to see what it does here at the 50, because that's a obvious resistance level, which also tells us if they don't break through the 50 and heading in this direction, that means they fail here, telling us they aren't going to go to the top of the trend channel. That puts more effort or emphasis on the downside, which means there might be a bearish J-hook pattern taking us back down through this level. So we want to watch to see what it does. And right now, we got all the makings for a reversal. Support on a trend channel support level, a bullish Harami telling us to sell and stop, bullish confirmation with a close above the T-line, stochastics coming up out of the oversold area. These are just the high probability trade setups that coffee is going to be moving in a bullish direction. Let's undo these. So again, I was illustrating this because this is a signal, whereas in crude oil, this isn't a signal. So that's those little subtle differences for knowing how to evaluate which trade to get into based on a good, strong reversal signal. Right now, gold, oops, that's not what I want to do. What does that do that? Oh, GCAG6. We can see what type of pattern is setting up on the gold chart. There's your fry pan bottom. There's kind of your cup and handle, and it's opening positive. Where's your next likely target? Right up here at the 200-day average. So I'd be a buyer of gold. And wheat, you kind of observe the obvious. The obvious is the 50 was a resistance level. Plus you kind of a trend channel going right down through here. And today we had that slow curve, almost a bobble. And now what do they tell us about the 50? The 50 is not acting as a resistance. Compare coffee to Joe. Well, Joe is the ETF for coffee. So, but you can also kind of visually see there's the top and there's the parallel bottom. So same type of chart. Wheat is usually just W. On TOS, it's, if you're trading the March contract, it's ZWAH6, or I guess on the TOS chart is /ZWH6. But it's usually just W. Soybeans is just S. And this is why when we start doing analysis of trends and commodities, this is where the visual aspects of the trend is very helpful. Which way is soybeans moving right now? Pretty much sideways. What can we kind of assess here? Is it just wedge formation? So probably wouldn't want to really trade something like this until it breaks out to the upside or breaks to the downside. If the bottom of a candle body and the bottom of the next candle body are the same price, but the top of the second candle body is higher than the top of the previous candle's body, the second body, yes, that's a bullish engulfing signal. As long as one of the as long as one of the closes meets the criteria. If the opens are the same or the closes are the same, but they had different, the other side is different, yes, it's a bullish engulfing. And same scenario that if they both open it or close one night and opens at the same price and then goes up and doesn't close higher than the previous day's open, that's still a bullish harami, as long as one of the closes is the same. Now, you don't see them very often, but if one day opens and closes, and the next day it opens at the same place it closed and closes at the same place it opens, that has a different meaning. And I forget what it is. I'll have to go back and look at it. Again, it doesn't occur very often. Okay, so now the only thing I'm looking at on the long side right now is the wheat trade. And the reason for that is we can see what type of pattern it's setting up. That slow curve, and broke this downtrending channel, closed above the 50, and still trading up a little bit. That's telling us there's a new dynamic coming into this price. Where's your next target? Well, if you drew a line right down through the tops here, pretty much where the 200-day moving average is. So, again, is that where it's going to move to? Who knows? But at least we know right now on positive trading, coming out of a slow curve, breaking a resistance level, and stochastic still heading up. Worst case scenario is type pattern. There's wave 1. Wave 3 should up to at least this level. Broke out through there. Then the next target is your 200-day moving average. So these are just kind of casual visual observations that you can see and see much more clearly based upon what type of signals do you have or what type of patterns do you have setting up to create the opportunity to get to those targets. Okay, let's see. All right, stocks. Oh, we did. I was ready to come on this morning, say January 25th. I usually kind of consider this part of the year about as slow and boring for everything during the time of the year. This is just a nothing time of the year. So I was kind of expecting today to be a kind of a nothing type of day, other than not being able to get on the chat room, couldn't get on TOS, power went down for 5 hours. Other than that, it was just kind of a boring day, which it was when you have all your power out and you can't do anything. No, if the open and close of two candles being the same could be considered a tweezer bottom, but usually you consider a tweezer bottom more like this, where they take it down. Oh, if this day and this day were the same, that would be considered a tweezer bottom. If this day and this day were the same, that would also be considered a tweezer bottom. And you usually want to have them to be pretty much exact because that tells you right where the support level is. And I don't know if anyways, I'll try to find a tweezer top or bottom somewhere as we're going through all this. All right, so some of the stocks on this boring day. Whoops, I'll just take this. Still like our chart on STR because we can see the pattern here. Wave 1, wave 2, going into wave. How did wave 3 start? With a doji gap up through the T line. Is this anything to be concerned about? Not really, because your stochastics are still heading up. You're still coming up off a strong signal. You can see what the pattern is. So you're going to get days where you're getting some backing and filling. But as you can see, the backing and filling over the last couple of days of trading has been very in that same scenario is something like Whiting, which had a gap up through the line. But notice the 2 days of consolidation, dojis. Makes this a very very simple analysis. Remember what our double doji is. If they open this positive tomorrow, you want to start buying immediately. Wave, no, we're not even. The only thing that the Elliott wave theory has done for us, or should have done for anybody, is basically point out that prices do move in waves. I forget, I don't think, the guy that developed it even said, I mean, the basic is wave 1, wave 2, wave 3, wave 4, wave 5. And then you get an ABC counter wave reversal. That's your standard. But he said there wasn't anything really concrete in that, because he also said you could have wave 1 through 7, or wave 1 through 7 with a couple of those waves having an ABC, each one having an ABC retracement. So he even said the wave count is very inconclusive. So all we're doing with waves is counting, because we know that the prices don't move in one direction constantly. They'll move down, then up, then move down, and then up. We're right now seeing whether this has been a bottom in the fact that they haven't closed back below the T line. Charles, they aren't really shooting stars, because where are they occurring? Occurring down here in the oversold or near the oversold area. So they're just kind of doji profit taking. Now, if the stochastics were up here in the overbought area, and this had been after an extensive uptrend, yes, now they are shooting stars. But remember, a signal is not a signal unless it's occurring in their appropriate place of a trend. Let's see, that was Whiting. I skipped to that one. Slurp, still coming out of this fry pan bottom pattern. And we still have one basic criteria when we're in a trade coming out of or in a fry pan bottom. All you can do is stay long until you see a close below the T line. So even though it'll be up here, remember, we're not at the top because look where our stochastics are. They're just kind of waffling in here. So you just stay long. Now, if it closes below the T line, yes, then you can close it out. Yeah, if Whiting opened lower, yeah, that would tell me that double doji setup is not in progress. That could have been just a bounce. Yes, then you close out the position again. Because if it starts trading lower, now what do you have? You have kind of that bearish J-hook pattern. Now, I say that, find a bottom here, and this looked like a bottom. The probabilities say this is to be buying because we've essentially had a reversal, close above the T line, But what's our criteria? It closes below the T-line. It's still in a downtrend. You close it back out. And I say this because there's a lot of time I would buy a stock and think, man, this is a nice signal or pattern. And then it comes back and closes below the T-line. And I'm thinking, oh, man, that was such a nice pattern. I still think this could go up. I have to remind myself, if it closed below the T-line, it's not in an uptrend. Close it out. You can always buy it back later. Penelope, yes, we record all our evening chats. Okay. Another one that had a good-looking chart is CMRX. See if I can make this big enough where we can see what we're have. Nice little close above the T line, and we're still trading above the T line. And just noticing now the 3T line is just above the 50. I'm sorry, just above the T line. The 3T lines, you still want to watch this one, because if they start trading positive from here and go through the 220 and or this level, notice what resistance you have. You don't have any real resistance until you get up to the 50 and up toward this level. So this has an element to it that it's got good buy in the buy mode. It hasn't closed back below the T line, and the upside potential is about 300%. Yes, this weekend is being recorded, and that's the package is that you'll get a recording of that. And for you new members that are coming in to these type of weekends are what I would call the nuts and bolts, the bread and butter of learning candlesticks, because it's all the information put into one contiguous learning process, so that the next time you start coming to sessions like this, that you're not in the learning process, you're in the confirming process. Whenever we go through different things, you say, yes, I remember seeing that. Now, we had been long ATV as long as it didn't close below the T line. But today it closed below the T line. So what did this tell us about the trajectory of this trade? Even though it gapped up and showed some buying, eventually the buying disappeared. The T line number 1 and number 2, notice what the trajectory was. There was nothing here showing any strength. So just that fact alone tells us we want to be out of this trade, move the money to something better. Your T-line rule has saved me. John, it has saved me a bunch of times. And because what it basically does, say, oh, this still looks good, this still looks good. Close here, I think I'll hold on to it because it was looking good. But then I have to step back and say, we know the probabilities that if it closes below the T-line, it's not in an uptrend. Get out of it. And another problem, getting off track here a little bit, is you're holding this. Remember, we always kind of fall in love with our trades. Bought it because we had hopes of it doing some great things. But now that those hopes it's kind of showing us it's not working very well, we always think, oh, man, this trade would look good. Should I hold on to it some more? At least now you can say to yourself, get out of it and move on to something that has a much better prospect to it. So you don't, that's why I always keep my portfolio as units. I can look at this and say, this unit's not working, close it out. Let's see. Marabuzzo with no shadow. Yes. Whoops. His name is close drop. I'm sure it's bald or shaved head. Yep. But it doesn't necessarily mean that, yeah, our illustration that if it opened right at the same level that it closed before, doesn't mean it couldn't have a little tail like this before reversing. Do we need an offer code for the weekend? Do we need an offer code for the weekend training package? Oh, I don't understand the question, Paul. Once you pay for the weekend, Abe will have everybody's name that was in it, and you'll probably get sent the downloads. Can you compare the chart? KMI was our next one. And then, again, part of the package is if you do the weekend and you want to do a review of the weekend, you have that. Or you can get any of the video training free off from the members area. So you email Abe and say, I'd like to get the GAPS review, and I'd like to get the entry and exit strategy review. So all those videos are now free to you. When you compare the KMI to crude oil, has KMI a definite? No, it doesn't have a reversal signal, but it has the inclination. It's probably going to pull back to the T line, and we have to see what it does from there. Yes, and that was, well, we take too much of that hopium. That was, yes, people that have paid for the weekend will get a word, and it's usually you get it Friday afternoon sometime. Okay. Yeah, once you have paid for the weekend, you'll get a passcode emailed to you, usually Friday afternoon. Okay, let's see. Where was I? Wasn't there. Oh. Okay. KMI. And this one. CFGN. Apparently somebody downgraded it, or I think did somebody mention that one of the shorts said they didn't think it was going to be get approved. But notice where it closed. Still closed above the T line. Still watching for this to start trading positive, and we'll start adding some more to this. Remember, this was your message right here. All right. So still trading this one, because if you look at the, remember, anytime you have these huge breakouts, it's even smaller yet. Back in. Yes, if you've taken the 2-day course in the past, you can always come back in for a review for free. Okay, some of the other ones that they're looking at is Sienna or Sientra. You can see the obvious trend channel. You can see where the buying started. Little trend kicker. Still think your upside potential is up here at the top of the trend. TRGP. Whoops, P. Another one that's starting to look attractive. Morningstar line. Notice where you are right now. Just right here on this resistance level. I'd still be a buyer of this one on any trading up through the 20. Can you make consistent, decent profits when making cash secured puts covered calls? Can you make consistent, decent profits when making cash secured puts and covered calls? Brad, yeah, the answer to that is obviously yes. I don't know what you mean by making cash secured and covered calls. As long as you know, naked short puts on stocks, yes. Yeah, that's what my little trading account, I use that for trading. Remember, puts and calls are just the method for buying the stock. So if you see a good stock chart, you can either buy the stock, you can buy the stock on margin, you can buy the puts, you can sell the calls, whatever you want to use for your strategy. Some people are just option traders, but remember, the underlying trading entity, the stock, is what you're evaluating. Buying the option is just the method for buying that stock. ANFI. Notice your little inverted hammer doji gap up. Notice your little hammer gap up. That's your message. More than likely, I would suspect this is going to be another same magnitude as this one right here. So, Brand, yes, I trade quite a few options. You own it or have a buy stop? We haven't picked up very much. I can't remember whether we bought some. We bought a little bit last week on these trading days right here. And the fact that they haven't been able to close it back below the T line after this gap up, still ready to buy this one. If I was buying this one now, it'd probably be above today's high, because that would tell you which direction they're taking it, especially after that little inverted hammer today. All right, so we want to try to find setups like this. What type of setup is this called? Anybody? Class? Got a J hook? Yep. Got the fry pan bottom, got your classic, and got your bobble. All correct answers. There's your fry pan bottom. There's your bobble. There's your J hook. What makes for a high probability entry tomorrow? A positive open. What's that tell us? That the 200 is not acting as a resistance. The J hook pattern's in progress. And what do we call that? We call that our classic. Fry pan bottom. And then a J hook. What's the prerequisite for a J hook? Is a strong price move. What's the results of a fry pan bottom? A strong price move. Yep, you can call it a cup and handle. So the fact that you can recognize that, yeah, and also a little kicker type signal. And notice where it did it, off the T line. So this makes everything set up for a perfect entry, that if you can see the bobble setting up, we know that that could create a J hook pattern and the classic. All we need is a positive open. So those are the type of setups that you want to keep an eye on, because they're usually very high probability setups. Remember saying about Cray here for the last few days, that this bobble looks like it's in progress. And today it worked. So what do we got? Wave 1, wave 2, wave 3. And how did this get started? We could see the slow curve bobble setup. Probably you're talking about AU. I would probably be buying it if it came up through the 200. And since the high is that close, yeah, I'd probably wait for it to come up through the high, because that high looks just about the same as, not quite. But if it came up, it basically told us it's confirming the kicker signal, the J-hook pattern, and telling us the 200 is not acting as resistance. So could you buy it at whatever this is right here? 228, what is not 228, 828, or I'd rather pay 7 cents more and pay $8.35 for it, knowing that everything's confirming. The scoop pattern doesn't occur that much, do they? Not very often, but they're very visually easy to recognize. All right, so this makes for a good trade setup. You're probably going to see this on the recommended list tomorrow, because all the probabilities of it, if it opens positive, tells us we've got a good strong chart pattern, which is your J or your classic fry pan bottom followed by a J hook. And NGLS. That's got a nice little morning star signal. Now kind of a doji sandwich. So what do we call that? A morning star signal followed by a doji sandwich. Morning sandwich, which usually, there you go, usually has a high probability there's going to be follow through to it. So a lot of the medicals or biotechs, there's your bullish engulfing. There's your close above the T line. Now, what's your next likely target? More than likely, back up here where the what was acting as support. Now we'll probably see if it's going to act as resistance. Yes, so if you're just familiar with the name, and again, the name McMuffin was just a cutesy little name, but it works. I think where I can show back here on the Dow. Morningstar signal, doji sandwich. What was the result? Nice strong price move. So that combination, anytime you see a combination of candlestick signals, we know what the results are usually for a Morningstar signal. Positive trading on confirmation. We also know what a doji sandwich results are. Positive trading. Now if you can do, just improves the probabilities that a reversal or a new uptrend is in progress. RLYP was trading indecisively after the piercing signal, except after hours it's gapped up into this area. So something's happened. You're going to have a best friend signal on this one tomorrow. I forget what their announcement was. That's right. Get fat listening to my classes, doji sandwiches, and yes, your first your first signal is a Morningstar signal. Yeah, that's just the one that we just call McMuffin. Now, a bullish engulfing signal followed, or then does the doji sandwich. Well, the bullish engulfing signal is the bullish signal, and then doji sandwich is confirmation. Oh, is this a possible buyout on RLYP? I think that was what's supposed to have occurred up in this area too. That's right. You shouldn't be sitting like me behind the desk for all these years. All right, another indication of what's happening in biotechs. Oh, for crying out loud. They just won't bring up this LABD. Keep an eye on that one. Yeah, I thought I saw that they had some sort of positive test today. Yeah, Labu doesn't seem to work either on this. Well, that's Labu is the bullish, and LabD is the bearish. But they just don't work on this system. Okay, we've done sessions in the past about anticipating the high probability trade setups. So left-right combo. This is NHTC. And where did we close? Pretty much right here at the T line. What do we know about this whole setup? If it opens positive, it's confirming as resistance, and more than likely you're going to have a strong uptrend after this. So this is where the entry strategy, by anticipating what should occur after a candlestick pattern / signal, what should happen. So a positive open would be a high probability there's going to be more upside. Not necessarily gap up. I mean, if it did gap up, that would even be better, because that tells you that the T line is not acting as resistance at all. And so A, B, M, D is another type of setup. Notice you had a little kicker signal. We're right here at this resistance level, that if this opened positive, more than likely you've got more upside to this one. I can make this real small. Notice we've got a wave 1, wave 2. Notice how this next wave is starting with a kicker signal. Now, once again, this is kind of your true kicker signal. Say true kicker signal. A true kicker signal shouldn't have this tail to the downside. But the fact that it opened and went the opposite direction of this candle, even though it does have a little tail, still tells you that's a kicker signal. Now, notice what it did over here. This isn't a current traded higher. Now, does that tell us that there's not going to be? Yeah, that pretty much tells us that there's going to be upside, but it might not be a sustained move or a reversal like a true candlestick signal. Mario, I'll get to Apple here in a little bit. I'll get to the biggies. So this is more compelling to be a buy area. It wasn't a real reversal signal. It was just telling you they were bouncing it right here off the T line. So this is why you want to know the exact specifics of each candlestick signals. Okay, yeah, let me take a look at Apple. Oh, if they're announcing their earnings tomorrow afternoon, then you see what they do with it. If they obviously trade it back below the T line, they're not real enthused. If they take it right back up, making kind of a doji sandwich, not a doji sandwich, but a stick sandwich, yeah, then you probably want to be buying on the close, because that, remember, usually the signals are going to tell you what the people that have been following the company or are in the know, what they're doing right before a major announcement. Oh, I didn't know they were changing the stop losses or stop limits. Oh, okay. So the stops are still, yeah, can be done electronically at your brokerage firm, which means you still have the capabilities. It's just that they won't be seen out there on the floor by the market makers. That your stop order will be put in at the brokerage firm, and when it hits that level, yeah, it might be only for the New York Stock Exchange. When it hits that level, then it automatically kicks in electronically from your brokerage firm, and it executes the trade. So it's just where they've, which is better for us. Yes. Not so much on the big stocks like Apple and that sort of thing, but if you get in a lighter traded stock where there's a market maker out there, they're more apt to come back and hit your stop. Okay, quiz time. So is this a good chart? And what type of signal have we seen in this one in the last couple of days? Questions we'll get to when I tell Jim to do the double line, then you type in your request. Okay, I'm looking right here. What type of signal do we have? Yeah, the answer is we don't have a signal. So if we're looking at this chart, what's this chart tell us as far as what our trend looks like? Just nothing. And just because we've had a positive day, remember, this is not a candlestick signal. Yes, sideways. So if I was looking at this chart and say, do I want to be buying this? There's nothing here that tells us that we want to be buying this. We don't have a buy signal. We really don't have any trend to speak of. So with that, here's one that we have been keeping an eye on. PACB. What's this chart signal or pattern? Yeah, there's really nothing here either. Because we had the potential of a J-hook pattern, but where did it close today? It closed back below the T-line. And if there was a buy signal in the last few days, what would it have been? It would have been our left-right combo. But what do we know? What's our simple stop loss for yeah, there you go, RT. Left-right combo. And why did it fail? Because if this is control, and the bears were able to close it more than halfway down this candle, who's in control? The bears are in control. So if you had bought this on a day like this, and it closed here, what did it need to do today? It needed to open and stay above the T-line. So now you've closed below the T-line. You've closed below the halfway point of this candle, which told us the bulls were taking control. That means the bears are still in control. And what did that do to our pattern? Told us there was nothing here anymore. Go someplace else. Now, the reason I say this is, again, this was my hardest reestablishing my mental analysis to say, this looks good. It's going to be a good move, another big move. And when it fails, I used to think to myself, man, how can I be so stupid all the time? Well, the answer is, I'm usually stupid all the time, but the real answer is, it's going to work. We have the ability to see when the trade's not working. So there's nothing wrong with buying here and closing here. You take that money and you go and try to find something that looks like this, where again, the probabilities are in your favor. This could move down, but the answer to that is it could. But is this a good short situation? Right now, I just look at it as a junky chart. There's no reason to be buying or selling the stock anymore. But is it a signal since it doesn't occur in the overbought, oversold area? But what was it kind of setting up for? If you cut this chart off right here, I think I can do this. What's it look like it's trying to do? Looks like it's trying to do a J-hook pattern, or continue this uptrending channel to go to the top of the trend channel. So this would have been a good one to say, all right, if this starts trading positive tomorrow, I want to be buying. As soon as I saw that it closed back below the T-line and back below this half point, this candle, what does it tell us about my pattern? It's pretty well disappeared. What did it tell me about the buying force? Well, the bears have more selling force than the bulls have buying force. It's a good nothing situation. Let's see. If you're looking at a chart like this, oh man, you realize it's already almost 9 o'clock and we're not even halfway done yet. Now, does this really look like a good looking chart? Not really. We're stuck in this downtrending channel. We're going sideways. Stochastics are not doing anything dramatic. So yes, another nothing. So I'm just trying to point this out that not every chart is going to look fantastic. And this was a good reversal signal. This one's just telling us nothing. So this is the advantage, too, of knowing how to scan each day. Again, in less than 20 minutes each afternoon, even if you don't know what you're doing, you're still going to be able to find 3, 5, 7, 8 good chart. And if you know what you're doing, you're probably going to be able to do that in 6, 7, 8 minutes each afternoon. Finding the. This is why you want to get your eyes accustomed to when a chart doesn't look good, just go on to something else, because there's, and that was what I was trying to make the point about our scanning, is that our scanning techniques for candlestick signals is so simple that you're going to be able to find chart patterns. Oh, how can I not even read my own handwriting? That you're going to have more trade opportunities than you're going to have money trade in. So at that point, your trade opportunities become cultivating the ones that you do have opportunities to be in for the best ones. So you're always going to have more than what you, I don't even remember what chart we were looking at. Oh, this one. All right, let's make this real big. Where do we find each night? Maybe I put out 2 or 3 stock picks. And go there. Somebody know how to do the where to get the link to find the stock picks? All right, is this a piercing signal? There you go, RT. No, it didn't open below the low the previous day. This is just a day. So remember, that little difference there, if this was a signal, and the Japanese rice traders had 400 years to identify the ones that work, and they don't call this a signal, that means it doesn't work very well. So it's not a signal. This open has to be below the previous day's low and close more than halfway up that candle. And this one, is this a piercing signal? The answer is no, because even though it opened below the previous day's low, it didn't close more than halfway up that candle. Brad, yes, everything that you see on this chart. Let me pick out something that's more. Oh, pshaw. Everything you see on this chart This is Apple on the daily chart. All these moving averages are fractal, meaning no matter what time frame, they work the 1 minute, 5 minute, 10 minute, or the daily, weekly, or monthly. So here's one. Again, when we're trying to put all the probabilities of being in the right place at the right time, here's one that you can start adding all that information to. What can we kind of identify on this chart? We pretty much have a trend channel in progress. You took this and then did this, you can see where they support and where they resist. Is see when we get to that support level. Well, everything that tells us this is probably a buy, which is stochastics in the oversold area. Got a doji spinning top, gap up above the T line. Today, notice what it did. When it consolidated, where did it consolidate to? Right back to the T line. Up from there. Now, when I say right back to the T line, the one thing you always have to remember when you do this analysis is we're the only ones. Very, very few people have the 8 exponential or the T line on their chart. So this wasn't like this was moving back to a suspected target because nobody has this target on their charts. This is just kind of your natural support and resistance for human nature. So when you put the investor sentiment and add a T line, which is the kind of the Fibonacci number of human nature, you add those two together, you get some very powerful combination of what prices usually do. Hammer, yeah, you've got a hammer, doji. Again, the tails to the downside and close near the top end of the range pretty much tell you that the bears are knocking it down, the bulls are stepping in. Would you call a close halfway up the body of a shooting star a piercing signal? Halfway up a shooting star, a piercing signal. Well, no, because where does your piercing signal usually occur? Down here in the oversold area. Shooting star, where does that usually occur? Whoops, that's a hanging man. Usually up toward the top of the trend. So if you had a shooting star and the next day they did open lower and came up and closed more than halfway up that candle, that's just kind of negated the shooting star that your uptrend is still in progress. Let's see, we did TRGP. I can see I've gone way over time. Here is where you observe the obvious, which is there was our Morningstar signal. Now you had a big, strong move up to the 50, and just a minor resistance level. This is where I always, if I've seen that it hits a resistance level, if it opened lower the next day, I usually take my profits. Because if something great was happening, it should open higher and trade higher. If it opened, means there's profit taking, there isn't great enthusiasm that at that moment, you can always buy back if they start coming back up through this level. So you gave up a little bit of potential profit. I'd rather give up potential profit than give back profits. I ask because you called the same situation with a hammer Pearson. Oh, Dean, do you remember when that was? I'm trying to think which one that was. Well, the body was big enough. I can't remember which chart it was, but I can remember the body was big enough on the hammer signal to say that, was it closing more than halfway up that little body, it was still considered a piercing signal. And the fact that it opened, now that I can't remember what the chart was, but I can remember what it looked like. The fact that it opened below the previous day's low and then came back up and closed halfway up that little body, it's still a piercing signal. So basically what you had was a piercing signal after a hammer signal. Remember, the more buy signals you see, the higher the probability that's where they're starting to reverse things. Okay, so back to our market analysis, which was very simply a reversal consists of a bullish signal confirmed and a close above the T-line. Well, the bullish signal confirmed, which told us that it hit the first target. A lot of people, so should we be buying? Well, if you can see there's a buy signal, remember the first criteria in candlesticks signals is the signal itself. The second criteria is a close above the T-line. However, if we see it open confirming our buy signal, where do you think our first target will be? At least back up to the T-line. At that point, we can decide what to do with that trade. In this case, the Dow is telling us, even though we kind of suspected a bounce up to the T-line, once it got here, we had to see whether it was going to break through or fail. Obviously, today it failed. So what's that tell us about our trend? We're in a downtrend until we see a candlestick buy signal and a close above the T-line. So that tells us, what did that tell us? That tells us on charts like this, where you had the potential, but it's never came up, BMW, what's this kind of setting up for? A bearish J-hook. I'd be ready to short this one. At what price? Probably on a lower open. And now, again, that's part of our entry strategy is we wake up tomorrow and the pre-market futures are showing the Dow's going to open up down another 80 points. And this one's opening lower. What's that tell us about our pattern? We got a bearish J-hook pattern. On the other hand, what don't we see? If we were ready to short this, we sure don't want to see it opening up here because that tells us in this area there's still some buyers. What we're looking for is the absence of buyers or more sellers starting our next pattern to the downside. BG. Notice what the bullish, the bullish strength was. Kind of our double doji. Notice when they took it up, how much strength there was there. It was indecisive days. What's this tell us when they were still taking this down? What's that make this pattern right now? Kind of a bearish J-hook. So you can still be shorting this one. The best place to have been shorting was somewhere up in here. You had a left-right combo, then you had a failure at the 50. Maybe shorting right here. That was a good probability trade. Would you short it here? Nah, you're already in. Would you short it here? Nah, you've got a gap down in the oversold area. Would you short it here? Yes, that's told you they were now in another pattern that you have higher prospects of more downside than trying to short it where it was already in a down or into its downtrend. GameStop. Remember, this failed up here. I think it was more of a bearish engulfing on the other charts. But notice what it did. Notice when it came back up, it was very indecisive. And where did it fail? Here at the T-line. What's this creating? A wave 1, wave 2, wave 3. So back to, no, we're not using Elliott wave. We just know things move in waves, usually wave 1, wave 2, wave 3. Does that really mean anything to us? No, because if we're buying or shorting here, wave 1, wave 2, wave 3, now we're just waiting to see what the next move is. This now becomes wave 1, wave 2, wave 3. This becomes wave 1, wave 2, wave 3. I'm not trying to count wave 3, 5, 7, 10, ABC. I just want to know what my next trade is going to be, what type of wave movement we're going to have. AXLL, we've made good profit on this. And when we got, this is part of the re-entry strategy. It opened positive and started trading positive. Look how far away it was at that time from the T-line. That was a good time to take profits. But then what happened by the end of the day? This was the signal that told us the possibility of bulls coming in, and then they negated it. We can be re-shorting this one because what's it tell us about our trend? We're still in a downtrend until we see a candlestick buy signal and a close above the T-line. So in the old days, before candlesticks came along, if I was short and I got out here and it then turned around and went down again, my first thought was, they're not going to trick me and get me back in shorts just so they can take it back up and give back some of my profits. Now I know at least what the indicators are telling me, that if this is still in a downtrend and I covered somewhere in here, I don't mind reshorting here, knowing that we're still in a downtrend. Same scenario. If this is a 10-point move and I only get 8 points of it, but every time I'm in it, I know I'm heading in the right direction, I'd rather have a much higher correct trade ratio than trying to get in a position shorting at the absolute top and covering at the absolute bottom. I just want to get as much as that as possible on correct trades, and then move on to another one where my correct trade ratio is high because the compounding effect will be all that much more powerful. NC, another bearish J-hook pattern, but if this opened lower, got wave 1, wave 2, wave 3. I think this is the one. This is the one I wanted to illustrate, that if you see a situation where they started bottoming out, but they're coming up very indecisively and can't get above the T-line, that tells you they aren't reversing it. They're just consolidating it, that there's still more downside. They fine if you're buying for the next half hour, but are there any long-term signals so you don't have to watch stocks? Lou, yes. Remember, what we're looking at right now, these are daily charts. Candlestick buy signal and a close back up above the T-line. Or if you're re-shorted, you stay short till you see a signal and a close back up above the T-line. That's, now, are you going to get the optimal trades? No, but you're probably not going to have as good a result if somebody's sitting next to their screen all day long. But you get very good money, I mean very good money, by using the daily charts. So I have a simple rule that if you're going to sell based upon a candlestick sell signal or buy based on a candlestick buy signal, you stay long until you see a candlestick sell signal and a close back below the T-line. You'll make tons of money that way, and you won't have to lose sleep. What would I do with VC now? Unfortunately, this was more to illustrate this, that if I had that type of profit, where you had basically a 45% move, I'd probably have half my position off and then see what to do with the rest of it. All this is about is you've got the 12 major signals. They're very easy formulas, and our formulas are on NinjaTrader, Metastock, Thinkorswim, TradeStation. I mean, they're out there. Plus, the description of the 12 major signals and the formulas for TCNet are on the website. And if you're in the chat room during the day and you have some specific software that you trade, just ask, where can I get the signals for Thinkorswim, and somebody will give you the link to get there. So this is, we're not, the information we have on our website, I think it was now 1,300 pages of candlestick information. It's not the process of, you can see so many of these investment promoters say, we've got the new secret on how to make money in trading. There is no secrets about candlesticks. This stuff's been around for 400 years. The only secret is learning how to use it correctly. And so that's not really any great secret. That's just common sense. So we're looking at cons. There's your wave one. There's your bearish J-hook pattern. I'd be ready to short this one on any bearish trading tomorrow, which would be a lower open, because a lower open would take you below this level. That would notice how wave one started, in this case a kicker type signal. There was our bullish Harami confirmed with left-right combo. But what happened when it got to the T-line? Bearish engulfing signal. What did that tell us about the T-line? That they failed. We're still in a downtrend. Fit. You know, a lot of people are watching this. There's that bearish J-hook pattern. I'd be ready to short this one on weakness. First target, see what it does here at this low. If it breaks that low, still have a wave one, wave two, wave three in progress. And this is a very good, clear illustration. This is why the candlestick signals are so clear to identify. Look what we had up here, a doji failure at the 50. Then notice what we had here, a big bearish engulfing signal. And what's our simple rule of the big signals? The bigger the signal, the more going. Again, this is not rocket science. We're looking at stuff that the Japanese race identified for us hundreds of years ago, and they identified it based on the probabilities of seeing things happen afterwards. Another failure of the 20. The 20 a good indicator? Well, in this case, they haven't been able to get up through the 20. Another one that you probably want to be going short, wave one, wave two, going into wave three to the downside. Oh, man, I've kept us way over. USG, same scenario, little shooting star, failure at the T-line, wave one, wave two, wave three. Had a distribution. All right. $43. Okay. And that takes the 43, 105. Should have taken it down to 60. That's about right. So that's actually true. So theoretically, $43 puts it right back up here, but still is an indecisive trading. So that has a whole different concept, but the likely chart patterns are that when you see a reversal and they can't get it up but very indecisively, just be aware of that next big move to the downside. Okay, I guess that's about all I got tonight. Are there any general questions on candlesticks? Some private messages earlier about the two-day training on the weekend. You need to bring anything, and the answer is no. All you do is just bring your coffee and your slippers and your pajamas. All you have to do is sit there, because you'll have all this information given to you free afterwards, so you can go back and review it. The only thing that we do in these trainings is all the information that you will get, you've probably seen in the past. It's just now put into a logical order and given a full description of why those things occur. and what the probabilities or the high probability situations. So the next time you see it, you're not in the learning mode, you're more in the confirming mode. So I guess with that, Jim, go ahead and do the double line. And then 2.8 seconds, do another double line. Okay, I got to go back up. All right. Kroger, all you can short. I just stay short on this one. Big lots, as you can see, they could never get it back up above the T line. They're still in a downtrend. Stay short on this one. And STRP, still a good looking chart. I'd still use the T line as my stop. Wouldn't want to see it close back below that level. And HIMX, that's a good looking chart. Especially, remember the simple rule of the doji. It's going to move in the direction of how they open it after a doji. If they open this positive, you basically have a doji sandwich in progress, moving away from the T line. After your big hammer gap up, let's see where it would likely go to. Back in channel, taking you up into about the $10 range. Angie, you just stay short on this one. They've been able to get back up above the T line. Where's the next logical target? Still down here at the 200-day moving average. And Kite, another one that didn't have a signal here. Tried to bring it back up, but then there was your signal again, your bearish engulfing signal. After they showed the 20, I'd just stay short, and if I was going short, I'd use this level right here, that if it down wave 3 to the downside. Tyco, that's a good looking chart. Anytime you see the gap up, expect a 45-degree to come off of there. And DB, that's also a good looking chart, provided it opens positive tomorrow. Anytime, now notice you're just coming out of your oversold area. Anytime you see that big candle or shadow to the top, if they open it up positive the next day, that tells you the profit taking of this day is over, and there was still so I wouldn't be afraid to be a buyer on positive trading on ACAD. Nothing here yet. It probably wouldn't be long, but I wouldn't be short either. This one is I wouldn't be a buyer of this one until they do get it closed up above the T line. Nally looks like it's still in a slow trend, even though it's a slight downtrend. It pays, 14% dividend yield? As long as it's not falling out of bed, you can always hold on to this one. GSAT, that's a good-looking chart. Just make sure your volume's good on a $1.20 stock. And CSTM, failed here. Various J-hook. I'd stay short on this one. FMI, same scenario. That's a good dumpling top, slow curve. That one I'd need to short immediately on weakness tomorrow. Still just simply use the T-line. Just the fry pan bottom. You can stay short on, close it up above the T-line now that you've got that dumpling pattern in progress. The signal, the more compelling, there's going to be more downside. Stay short on lock, or you can still be buying or shorting lock on this tomorrow. Smegmo, this one, as long as it stays above the T-line, you can stay with it. Now, this is the type of chart that you would suspect, with them gapping up a little bit, that if they open this at yesterday's or today's open, Look for the trend kicker. That means there's side. ECPG, another one that you got a doji. This is kind of what they call the advanced block. Notice you had a big day, a smaller day, a smaller day, and a smaller day. If this opens lower, you take your profits. If it opens positive, you're buying it because that tells you the consolidation above the T-line is over. And Noah, just stay short on nothing there. GWW, Granger, you can see that it's in a sideways base. Probably wouldn't be long or short. I'd probably be more apt to go short as long as they're below the T-line. Today's low. That would tell me the T-line is still acting as a resistance level. ABV. Notice where it's kind of running into trouble, right about the same level it topped out before. I would suspect on a lower open they're going to come back. Remember, once they break through a resistance level, they'll usually come back and test it. And this will also be a function of if they open the markets lower tomorrow, some of these. So I'd suspect they're going to be back to test the 50. This one hasn't been able to get back up above the T-line. This is a case where you wanted to see it open positive and trade positive today, breaking this downward channel. The fact that they closed it back below the T-line, if I had bought this today, based upon the positive trading after kind of a doji sandwich, and it closed back here, I'd close it right back out because the probabilities have just gone against you. MTSI, not a reversal, so it's more than likely coming back to test this level, the T-line, to see if that's going to act as support. ABX, breakout through this level and through the 200. Let's take a look at this on a let's see if there's a it's kind of a fry pan bottom breakout. So I wouldn't be afraid to be buying this one at this point. I wouldn't want to see it close back below the 200. RWM, J-hook type pattern. Means if things apparently trade off tomorrow, you want to be buying this one. TWM, ultra short the Russell, same J-hook pattern. You can do these on positive trading tomorrow, which means the market will be trading lower. Fuel cell needed to get back up above the T-line. It couldn't today. Flat. So with it closing back here, I would have probably closed out the position. If I was going to buy this now, I'd put a buy stop just above the 20 or above these highs. That would tell me my double bottom is in progress. Tankers, another one that failed. So this is a perfect case again. If you're buying here, where's your first target? Seeing what it does when it got to the T-line. When it did a doji and a failure. I'd be back out of that trade. Port just doesn't have out of its own way. It's been in a downtrend for so long. You shouldn't own it. If you were short, you can stay short, but you can't short it down here below 5. And I wouldn't be a buyer until you see a buy signal in the close above the T-line. 3D, another one that's having a hard time getting above the T-line. It needed to open positive and trade positive today. If I had bought this on Friday, I would have closed it out today because it's back below the T-line. ProShares, same J-hook pattern. If it The market's open weaker tomorrow. That J-hook pattern's still in progress. IMX, I'd be a buyer of this one on positive trading tomorrow. ZFGN definitely needs to open positive tomorrow. But this consolidation activity on this one. Wynn Resorts. This one's got a nice little scoop pattern in progress. Now, let's trade buy stop at today's high. If it comes up through there, telling us that neither one of these moving averages are going to act as resistance anymore. And notice what they've been doing. Doji gap up, doji gap up. So positive trading from here is probably implied. The first target is filling this little gap right there. But that would further confirm your scoop pattern. Oshkosh, stay short. Nothing here. Deere, a failure. Notice they came right up to the 50. Evening Star signal. Wouldn't be afraid to be shorting this one on weakness tomorrow. And that weakness, again, includes seeing the market not opening up strong and seeing the stock opening weaker also. WR Grace, all you can do with this one is short. Now, the further away you move from the T-line, the higher the probability. So if I was short right now on wave 2, wave 3, this wave is getting almost, it looks like there's still a few more points to the downside. But if I was short right now, my safety stop would be at today's high. If it had enough strength to come up spinning top today, that tells me at least they're bouncing back up to the ANET. Another one that had the opportunity to bounce back up to the T-line, which it did. Today, a bearish engulfing. You're still on a downtrend. Caterpillar. I guess that one was the one that pulled down Dow early today. Another failure right here at the T-line. I would suspect at least you're going to come down here to the bottom of the this channel, trend channel. Hess. Same failure. Stay short. Did we do Enoch? Oh, Enoch. Oh, I had that one on here I skipped that one. Enoch is just kind of a clear example that if you see a pattern setting up, there was your doji sandwich that took you out through the 50 and the scoop handle. You always get moves like this. Definitely not, but this whole pattern was setting you up that if you'd be in the right position, to be happier than a pig in doo-doo if this had opened positive and over the next 4 weeks had gone up to here. The fact that it did it in one day is just kind of an illustration that this is telling you that the buying is coming in. You don't know how strong the buying is or when it's going to occur or what magnitude is going to occur. It just puts you in the right place at the right. Western, stay short. This has never had an opportunity to reverse. Nugget was picking up a little bit of strength today. Another scoop-type pattern setting up. So that's why we're probably going to get a recommendation on AU, because it looks like gold is acting well. And if this opens positive, our classic pattern is in progress. The Qs, just like the back below the T-line, if they open things lower tomorrow, the pre-market futures are lower tomorrow, you definitely want to be adding short positions again. Steel, just not able to get out of its own way. The price one, man, it's 7.5. My dad was alive back in the early 60s. He worked for U.S. Steel. U.S. Steel was the belle of the ball. It was, I think, they'd watch the stock. It was trading around $117. It was the golden child of Wall Street. And then through the years, as and 7, thinking, man, how could it get that low? Then it turned around a few years back and went 90. Now it's all the way back down here. So just not able to get started. TWM, AEM, one of the mining companies. You can buy this one. It doesn't have a very active chart, but you can do a trend channel, so at least you know your next target would be back up here into the $31 area. FXY, I don't know what to tell you there. That's not a, oh, that's the Japanese yen. I would be more apt to go short on this one, especially if it came back down through today's low. Facebook is just not a, I mean, right now, over the last few months, it just has not been a good trader. Now, when it broke this support level, you knew where the next target was, the 200. Probably seeing a bounce, but it's just, notice how waffly it is. It's just, I'd hate to have to trade this one right now. And this one had a kicker type signal. Now, kicker type signal or a kicker signal is your highest probability, strongest reversal. Except as soon as if they negate it right away, you close it right back out. Because I told you this information was negated. At this point, you can still be short on this one. NXTD, yeah, bounced right off the T-line. I'd suspect your next target is the 200-day moving average. That's what I was kind of hoping that we would see over here on ZFGN. So I usually hang with these as long as they don't close below the T-line, because there's usually a high probability that this whipsaw, this was the message, so there's usually more to follow. What are your specs for the T-line? 8 T-line is the 3 exponential moving average. The 20-year note, still in an uptrend, and that was the 10-year note as well as the 20. Notice how when it broke this wedge formation, all you can do right now is stay long as it stays above the T-line. And Christopher Banks. Just nothing to get real excited about. It was in the process of breaking out through this level. The failure with a bearish Harami tells you you're probably back in this trend channel. I'd be trading something else. Oh, you can stay long on this one, but suspicion would be that this is a very low volume trading stock. So I'd be careful of that. Remember, Marty, if you're selling or if you're buying or if you're shorting a signal, you want to see it up in the overbought area. If you're shorting a pattern, more than likely it's already in the oversold area. That was what the pattern was developing. So remember, there's a difference between where you buy on a signal and where you buy on a pattern breakout. The stochastics will be in the opposite of what you think you should be on the patterns. If you see something where, which ones did I? If you can see the pattern, bearish J-hook pattern, this told us that I wouldn't short it here, but I definitely shorted it here because that told me the pattern was still in, telling me there was more downside. Oh, I forgot to do the biggies. Sorry about that. Amazon barely stayed up today. Right now, it's still broken this down trending channel with a doji sandwich. See, we did Apple. Apple stayed above the T line, but it has to stay above the T line. If it closes back below the T line or the down progress, and Starbucks, trade Starbucks at all. There's just nothing there to tell me I want it. There's that you can get your teeth into anything. You have down days, up days, down days, up days. I mean, it's not going anywhere, and it doesn't do it with any consistency either. I backed off today. As long as it stays above the T line, I'd stay with it. So the risk factor is, at this point, is not very far away. If it closed back below the T line, I'd close it out. On DDD, I think DDD, you had a hard time on it yesterday or Friday because it was trading above the T line. I would have closed it out today and then get ready for a bearish J-hook pattern. P6. Yep. Short this one. Notice your little shooting gap down. So even though your shooting star isn't up here above in the overbought area, you're in a downtrend. And notice where that sell signal occurred. Right here on this downtrending channel. So where's your next target? First target is probably right down here at the bottom of the trend channel. Oh, silver. Oops, that's soybeans. SIAH6. Silver. Silver just hasn't had any direction. Now, fry pan bottom, you can be buying this one. If I was going to buy it, I'd rather pay for it if it came up through this level, breaking out through here. Gold has a more distinct pattern with the fry pan bottom. The fry pan bottom, kind of cup and handle J-hook pattern to it. And Tesla, ever since your shooting star gap down, you can observe the obvious. The obvious is they haven't, every time they open it positive at the T-line, they immediately sold it off. Okay, Paul. And it will be brain frying, butt sore, but we'll kind of dig up some of my old jokes just to make things lively. Okay. Important to see how they open this market tomorrow, but I would, what did I just do? I would suspect that they're telling us they can't get up above the T-line. We're still on a downtrend. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow, provided I can get on and the power doesn't go out and the turkeys don't come in through the front door. All right, everybody, we'll see you in the morning.